Today is Tuesday, the 21st of July, and coming into the market open today after yesterday, the second consecutive daily close below the 50-day moving average for the S&P, and similarly for the Nasdaq, although it's had multiple closes below it now in recent trading sessions. But yeah, clear downside momentum for the Nasdaq with a 10 and 20 day below the 50-day. With a pretty steep decline for the most part. The Dow Jones and the IWM are holding up better, but they are starting to roll over at the same time. It's looking like the 10-day may cross below the 20-day for the Dow, and the IWM's they're all the lower time frame moving averages are starting to converge with each other. So yeah, this consolidation is definitely prolonging. Definitely no signs of a breakout to the upside coming in the near term or the near future, in my opinion, based on this current price action. The Kospi did see a little bit of relief yesterday, or today, in today's session rather, but for the most part, it's still taking a beating, and it's coming into its high time frame moving averages. So I'd expect to see, just potentially a little bit more pressure coming into this index before some sort of relief does come. And I have only just started monitoring this, so I am not really too sure how it kind of interacts with all the other markets, but for the most part, it's basically a proxy for tech and semiconductors. So the fact that the Nasdaq selling off or kind of going through this slow bleed period, it makes sense that the Kospi is doing what it's doing. The VIX, slight pullback from the day prior, but really it's just kind of hovering towards this lower end of the range. So no real uptick in volatility, which is potentially a sign in terms of the market will continue to chop until there is either some sort of volatility which will create a reaction to the downside, or there is some relief to the upside. But for now, it just seems like the market wants to just continue doing what it's doing. The dollar index is kind of slowly grinding higher. Nothing really too significant in terms of the last few trading days, but this kind of breakout level is still holding, so that is something that I'm going to continue to watch and continue to monitor. The semiconductor ETF is basically showing the same thing as the Nasdaq, still cooling off, still in a downtrend. Space stocks still in their downtrend. Healthcare ETF, it looks like for the most part this brief rally that we had towards the latter end of June is kind of unwinding, and it looks like that may be a false breakout here of this level. Definitely a key level there. So I guess the thing to watch now is whether or not it can hold this level, whether or not price starts to close below that level. Definitely something to watch there. And in regards to biotech, similarly to the healthcare index, it's just retracing this move that it's had throughout June. It looks like it's holding up a little bit better than healthcare. It looks a little bit more clean, a little bit more controlled in terms of the price action over the past week or two, but nonetheless it's still below its 10 and 20 day, and looking like it's potentially going to sell off a little bit further. Energy ETF is slowly grinding higher. It's not super clean, but I guess most energy of the energy sector never really trades that clean anyway. It's very gappy, not very linear. But that does coincide with the fact that Brent oil is back above 90, holding above 90, and it's looking like the 10 days is moving aggressively higher, and it's going to reclaim that 150-day period and is already above the 200-day. So I still don't know whether this is just a relief rally, I guess a prolonged dead cat bounce. But for the most part, it is showing strength right now, and with that coinciding with Iran and US escalating, re-escalating, no kind of end in sight, in my opinion, in that regard. I wouldn't be surprised to see this continue higher, and if it does break this 100 mark again and hold above there, then I think actually that's probably not going to be the best look at all for risk assets, and that might be the trigger for things to really unwind a bit further. Precious metals are seeing a little bit of relief, more so silver than gold, but they are kind of looking like they're potentially bottoming out here at a key logical level as well, so it makes sense. So maybe that's just a structural kind of move as opposed to something fundamentally changing. Copper is also catching a bid and has held up relatively well for the most part compared to gold and silver, so another thing to keep an eye on. Bitcoin is kind of breaking out, which is is nice to see, based on the fact that these lows are holding, and it's the way that it's held, the way that price has held this 20-day, and now back above the 50-day. It's just, that is exactly kind of what you want to see to have a clear line in the sand in terms of if price falls back below this kind of 20-day period, you know that any kind of momentum has been lost. But for now, it's holding it really well. So yeah, I'm interested to see where this kind of goes from here. Another underside retest of the 200-day moving average would be great, and if it did retest that level again, or that moving average again so soon after this first attempt back in May, it would be definitely a good sign, and seem very constructive in terms of this actually being the bottom. And I'd definitely turn into a bull from that point onwards. I am fairly bullish in terms of what I'm seeing right now, but it could still go anyway. This is still range bound for the most part. It's coming up against a clear resistance level here at 66, 67k. So yeah, I'm not super bullish, but definitely starting to feel a little bit optimistic. The number of stocks above the 20-day moving average, first time that it's closed below the 50 midpoint since June, about a month ago. So maybe signs that actually, yeah, weakness is definitely there, and this is also supported by the fact that the number of stocks making 1 month highs is came down massively as well. The 200 mark is the level that I really want to see hold, or either fall below to be a sign of capitulation. Looking at the number of stocks making 52-week highs, that also came down massively, completely retraced the prior week's move, and is actually reading below 100. So anything below 100 is worth paying attention to, in my opinion, and below 50 for sure. That's like the absolute lower end of this range. So kind of in that territory now, and so basically just selling across the board, and that is also supported by the fact that number of stocks making 52-week lows is stayed relatively flat in comparison to the prior day reading. So clear selling coming into the market now. Just having a quick look at treasury yields or bond yields, still looking like it wants to potentially push higher. No major moves, but definitely potentially poised to break out. Looking like it's coiling up quite nicely. So still nothing too tangible to gain from these charts, but they are leaning more bullish, if anything, in my opinion. And then just taking a quick look at Stock B's primary breadth indicators. Another balanced day yesterday, but notably the number of stocks that are up 25% in a quarter compared to the number of stocks down 25% in a quarter has actually flipped red for the first time, and that is the first time since April. So that's something to pay attention to, in my opinion. Sellers are clearly in control, as quickly as we saw just now on the breadth indicators, but also showing up here. even though when the days are balanced, there's no real indication of bears or bulls in control. But when there is a clear winner in that regard, is definitely the bears. So sellers are in control, and there's no real signs of any strength coming back into the market yet. So based on that analysis and based on everything that the market's showing me right now, I am in the camp where I believe that the market will continue to chop and slow bleed until there's some form of capitulation. And I'm going into today with a neutral, but more leaning towards the cautiously bearish side.